$6 billion for Terns Pharma. Merck is just panic buying at this point to save their oncology pipeline.
Panic? Oh, come on. I looked at the clinical data. Late-stage cancer assets are gold dust right now. $6 billion is perfectly rational.
Spoken like a true spreadsheet apologist. But if you want irrational, Blackstone is apparently kicking the tires on a global cricket league.
Wait, really? Cricket?
Yep, from biotech billions to buying wickets. But first, Unilever is quietly trying to spice things up with McCormick. The rundown.
$600 million for Food Panda's Taiwan business. Grab is just vacuuming up everything in the region.
It's a classic consolidation play. Food delivery is a brutal margin game, Maya. You either buy the competitor or bleed cash fighting them.
Sure, but Grab is already the giant there. Buying out a local unit feels less like innovation and more like they just want to stop looking over their shoulder.
Speaking of looking over your shoulder, Warburg Pincus is doing a very specific carve-out in India. $217 million for Maneesh Pharmaceuticals.
But only their non-tuberculosis drug business.
Right. Which is exactly the kind of surgical private equity deal I love. Leave the heavy public health stuff, take the high-margin pills.
Honestly, reading the structure on that one made me smile. It's so clean.
You want clean? Let's talk about the absolute frenzy in Big Pharma right now. Merck is reportedly floating $6 billion for Terns Pharma.
$6 billion for late-stage oncology assets. I'm sorry, but the premium they're putting on these pipelines is absurd.
Is it cancer drugs print money if they hit? You know the math.
If they hit. Nate, you sound like a guy selling me a lottery ticket. Gilead is doing the exact same thing, circling a $2 billion buyout of Ouro Medicines. Big Pharma is just panic buying biotech right now to plug their patent cliffs.
Panic buying is a strong word. I call it securing future revenue streams.
Call it whatever you want, but the multiples don't make sense. I want to see the clinical data, not just the pitch deck.
Okay, skeptic, let me pitch you a different kind of deck. Blackstone is reportedly kicking the tires on a stake in a global cricket league.
Wait, really? Blackstone?
Private equity loves sports rights. It's just recurring revenue with better merchandise.
That's hilarious. I guess they ran out of software companies to buy.
Well, AvePoint is still hunting. They're actively looking to drop $100 million on mid-market tech deals right now to hit $1 billion in revenue.
We'll see if they actually pull the trigger. But going back to the big swings, I can't stop thinking about that Unilever rumor.
The food spinoff?
Yeah, quietly exploring a spin-off of their food business to merge it with McCormick.
The Spice Guys. If that happens, it triggers a massive wave of consolidation in consumer goods.
Exactly. But before we get into the spice trade, we need to figure out if Merck is actually going to ink that $6 billion Terns deal tomorrow. Let's open up the footnotes on that oncology pipeline. The big one, $6 billion for Terns Pharma. I read that headline 3 times this morning just to make sure my coffee was working.
It's a massive check, even for Merck. But look at the map here. Big Pharma is staring down the barrel of some terrifying patent cliffs. They're buying revenue replacements.
Buying revenue, sure. Overpaying for it? That's a different conversation. Analysts are calling this an intense premium for late-stage oncology. I call it panic buying.
Panic buying? Oh, come on. Oncology is the golden goose right now. You secure a late-stage cancer asset, you lock in a decade of cash flow.
If it gets through trials, Nate. Look at the pipeline. Everyone is chasing the exact same specialized assets. Gilead is reportedly a week away from dropping $2 billion on Ouro Medicines too. It's a total feeding frenzy.
Exactly. It's a frenzy because the supply of good targets is shrinking. If Merck doesn't pay $6 billion for Terns today, someone else pays $7 billion tomorrow. It's musical chairs with billions of dollars.
Spoken like a true banker who just wants his advisory fee.
Hey, I'm reformed, mostly. But the logic holds. Merck has the balance sheet. Why wait and risk losing a strategic pillar of your cancer portfolio?
Because $6 billion is a lot of capital to tie up in one highly specialized biotech play. I pulled Terns' latest trial data. It's promising, yes, but the footnotes show some serious timeline risks on commercialization. If they hit a regulatory snag, that $6 billion valuation is going to look absurd.
Regulatory snags are just the cost of doing business in pharma. Merck knows how to navigate the FDA better than almost anyone. They aren't buying Terns for what it is today. They're buying it to plug it into their massive global distribution machine.
I just hate the precedent it sets. If $6 billion is the new floor for late-stage oncology, mid-market biotechs are going to start demanding impossible valuations. AvePoint is already out there hunting for $100 million in acquisitions just to hit $1 billion in revenue. Everyone wants a massive multiple right now.
Speaking of impossible valuations, did you see what Blackstone is kicking the tires on?
Don't tell me it's another software roll-up.
Not even close, a global cricket league.
Wait, really? Cricket?
Private equity loves live sports. The broadcast rights alone are practically an annuity.
A buyout shop running a cricket league. I would pay good money to watch Steven Schwartzman try to explain the rules of a wicket.
Give it a year, he'll be bowling the opening ball. Whatever they call it.
Stick to M&A, Nate. But look, tomorrow we should find out if Merck actually inks this Terns deal, or if Gilead signs on the dotted line first.
It's going to be a heavy week for healthcare, but they aren't the only ones writing checks. Warburg Pincus is quietly making a very strategic play over in India right now.
$217 million for a non-tuberculosis drug carve-out. I've been digging into that Maneesh Pharmaceuticals structure all morning, and there's a lot hiding in the details. Voices for now.
So the analysts are out in full force on this Merck deal. One of the notes I read this morning basically said this $6 billion pursuit of Terns Pharma underscores the intense premium on late-stage oncology assets right now.
Intense premium is a polite way of saying panic buying.
Oh, come on. It is not panic buying. It is securing the pipeline.
Nate, $6 billion for a single target. Big Pharma is staring down the patent cliff and just throwing cash at whatever biotech has a pulse and a phase 3 trial.
See, my banker brain totally disagrees with you here. You pay for certainty. Late-stage oncology is de-risked. $6 billion is steep, sure, but if it hits, it pays for itself in 4 years.
If it hits, I read the trial data footnotes. It is promising, but calling it de-risked is generous.
Fair, but look at what else the industry watchers are saying today. They are predicting a massive wave of consolidation in consumer packaged goods, specifically citing this Unilever rumor.
Right. The whisper that Unilever might spin off its food business and merge it with McCormick.
Which is wild. Hellmann's mayonnaise meets Old Bay seasoning.
That sounds like a terrible potato salad. But structurally, a spin merge makes a ton of sense to unlock value.
You just love a complex structure. But speaking of wild pitches, did you see the Blackstone leak?
The cricket one? Yes.
Blackstone evaluating a stake in a global cricket league. I would pay good money to watch those investment committee meetings. Just a bunch of New York guys pretending to understand a wicket.
I guarantee you some 24-year-old associate had to build a fully functioning financial model for a sport they just Googled. But hey, sports rights are the ultimate sticky revenue.
True, but let us look ahead to tomorrow. We are waiting to see if Merck actually signs that $6 billion check, or if Gilead beats them to the punch with their own $2 billion Ouro Medicines deal.
I am actually watching software tomorrow. AvePoint just announced they are hunting for a $100 million acquisition to hit their $1 billion revenue target.
A mid-market tech deal dropping on a Friday?
Exactly. Let us see who is working the weekend. Spill the tea.
Okay, but tell me, you saw the rumor about Blackstone kicking the tires on the Global Cricket League.
I did, and I have so many questions. Mostly, who at Blackstone is suddenly a massive cricket fan?
Hey, sports assets are the new software. Recurring revenue, insane brand loyalty, zero churn. You lock in those broadcast rights and just sit back.
Zero churn. Nate, the fans literally riot. But fine, I get the media rights play. It just feels like a very un-Blackstone pivot. I want to see the underwriting model on a cricket franchise.
I guarantee you some 24-year-old analyst in New York had to learn the rules of 2020 cricket overnight just to build that pitch deck.
Poor kid.
Speaking of weird combinations, the whisper on the street is Unilever is quietly trying to spin off its entire food business and merge it with McCormick.
Wait, really? The Spice Guys?
Exactly. Industry watchers are already saying this could trigger a massive wave of consolidation in consumer packaged goods.
Oh, come on. A massive wave. That is pure banker spin. Unilever has stagnant growth in its food division, and they are looking for an exit hatch. You don't fix a bloated portfolio just by sprinkling some Old Bay on it.
That is incredibly harsh, but also probably true. Still, if you combine Unilever's global distribution with McCormick's margins, there is a real synergy story there.
Show me the actual margins first. I need to see the footnotes on Unilever's legacy food assets before I buy into any synergy narrative.
You and your footnotes, we will keep an ear to the ground on the spice merger. But we need to shift gears because Big Pharma is throwing around absolute stupid money today.
$6 billion worth of stupid money, to be exact.
Yep, let's talk about Merck and Terns Pharma. Tomorrow's radar. I'm refreshing the SEC filings tomorrow, specifically for Merck. $6 billion for Terns Pharma. That oncology premium is getting completely absurd.
Absurd? Come on, it's standard defensive M&A. They need that late-stage pipeline. I'm actually watching Gilead. $2 billion for Ouro Medicines could hit the wire tomorrow.
$2 billion is couch change for Gilead. I'm way more interested in the Unilever gossip.
The McCormick merger?
Yes, spinning off their food business and combining it with the Spice Guys, that would trigger massive consolidation across the whole sector.
I'll believe it when I see a proxy statement. Unilever moves slower than molasses. My money is on AvePoint. They're actively hunting for a $100 million tech acquisition to hit their $1 billion revenue target.
Fine. What about Blackstone evaluating a stake in a global cricket league? Tell me that isn't a pure vanity play.
Wait, really? Cricket?
Private equity guys just want better seats at the matches.
I actually need to see the term sheet on that. Keep your alerts on. We'll see what breaks tomorrow.